Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm with KKM Financial. Well, we're looking at a VIX slightly higher today, right around the 29 handle. Now that's up from Wednesday's low, near-term low of 25.92. So we are seeing some firmness in the VIX, moving into the fact that we do have a press conference here later today about China, and the market, I think, is anticipating that as a volatility event. Couple that with the sell-off we saw yesterday in the market, I think that's why we see the VIX holding up here. Now, when you look at realized volatility, it is interesting that the market does appear to be pricing in the possibility of some type of event risk here near term, because realized volatility continues to trend lower. 10-day realized volatility right around 20%. 30-day realized volatility, that's how much the market has moved on average the last 30 days, 25%. So the VIX at 29 would imply that there's a little bit of a premium there relative to what the market has realized. Looking at the roll market, that's widened out slightly today. It's around 85 cents, so there's still some decent contango there between the first and second month. So again, the back month futures are a little firmer than the front month, at least midday. And when you look at the futures curve as a whole, flat from July to September, then you have that speed bump in October. Certainly, I think the market continues to anticipate some fireworks around the election. Looking at VVIX, measure implied volatility on the VIX options, that's trending lower, folks, and we're looking at around 108.5 right now. Now, it is interesting that yesterday we saw a 106.44 print. Now, that's cutting into the gap that the market realized from February 21st, so it is trending lower, and we continue to see now implied volatility in the VIX options getting down to levels actually pre-sell-off. So it is an interesting dynamic here as we move into June. Also, activity. Put side today, really, June 26 and 25 puts is where the action is, and July 22 puts. Those are the biggest or most active strikes today. Looking at next week, I want to point out, going into a new month, certainly unemployment next week will be highlighted. I think the China situation will continue to play out into next week. Couple that with the reopening storyline of that narrative. And the last thing I want to point out is the Fed is going into its quiet period because they have the meeting on June 10th. So you're not going to hear anything from the Fed between now and June 10th. So that's another thing to consider when you look at the vol structure.